Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 1, and this is Section D1. This is a remembering and understanding topic. Identify the preconditions needed for accepting or continuing an engagement. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to superfastcpa.com and check out our free 1-hour webinar training where we go over the key ingredients to passing the CPA exam. Again, it's only 1 hour, it is free, and we will show you how to pass the CPA exam without wasting months or even years of your time. After you check that out, make sure you check out becoming a pro member of SuperfastCPA because pro members get access to a lot of great stuff. They get access to the pro course where Nate goes over in detail exactly what you're supposed to be doing every single day to pass the exams. It's kind of like a more in-depth version of the 1-hour webinar, and pro members also get access to the full 10-question versions of these YouTube videos that I typically make. Just one thing I want to let you know, this video is going to be 5 questions for YouTube and 5 questions for members just because this is a fairly small topic, but I still wanted to go over it because it is a good topic to kind of prep us for the next topics that we're going to cover in Section D2. So again, this is a 5-question video for YouTube and for members, but just letting you know, SuperfastCPA Pro members typically get access to full 10-question versions of these 5-question YouTube videos. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member because you'll get access to those full 10-question videos to get a little bit more practice and a little bit more understanding. With all that, let's dive straight into the questions. All right, here we are at question 1, and let's just dive straight in. This is a fairly straightforward topic, so these shouldn't be too difficult to go over. An auditor is evaluating whether to accept a new audit engagement. Which of the following must the auditor determine before accepting the engagement? Okay. And just based off of the name of this video, you'll probably already know the answer, but let's still go through the options just as practice. Option A, whether the audit will result in a qualified opinion. B, whether preconditions for the audit are present. C, whether the client's financial statements are free of material misstatement. Or D, whether the financial statements have already been prepared. Okay, so out of all these, again, you probably already know the answer just based off of the name of this video, but if not, that's okay. We're going to look at the explanation to understand what preconditions are, and then we're going to start talking about them in the next question. So again, you probably already know the answer, so let's go ahead and look at it. All right, as you probably already know, the answer is B, whether preconditions for the audit are present. So again, that's what we're going over in this video, preconditions before you accept a new or an existing audit engagement. Let's talk about it. Before accepting an audit engagement, the auditor must determine whether preconditions for the audit are present. First, the auditor must understand their responsibilities. The other preconditions include the acceptability of the financial reporting framework, management's acknowledgement of its responsibilities, and the absence of scope limitations that would prevent the auditor from complying with professional standards. So again, these are the preconditions, the things that have to be there before you are willing to accept an audit engagement. And then there's more that comes after that, of course, and we're going to talk about that in the next videos, but we're just talking about the preconditions in this video. Let's go ahead and dive into the next questions to start learning about each of those individual preconditions, one question at a time. All right, here we are at question 2. When evaluating the acceptability of the financial reporting framework, what should the auditor consider? Okay, so this is, again, one of the preconditions. Let's talk about the options. A, whether the framework is commonly used in the client's industry. B, whether the financial statements will be free from material misstatements. C, whether the framework is appropriate for the purpose of the financial statements. Or D, whether the framework will result in a clean audit opinion. So out of all these, what's the point of evaluating the acceptability of the financial reporting framework? Like, what are they trying to accomplish with that? Why is that a precondition? If you don't know the answer, that's okay. Again, we are using these questions to learn the preconditions. But if you have an idea, maybe pause the video, think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are at the answer. The answer is C, whether the framework is appropriate for the purpose of the financial statements. So let's talk about this precondition. A key precondition for an audit is that the financial reporting framework to be applied in preparing the financial statements is appropriate for the purpose of the statements. This includes evaluating whether the framework is relevant and sufficient to meet the needs of the intended users of the financial statements. For example, GAAP or IFRS would generally be acceptable for general purpose financial statements, whereas a special purpose framework may be acceptable for specific uses, such as tax reporting or regulatory compliance. Ensuring the framework is appropriate helps the auditor provide an opinion that is meaningful and reliable for the intended users. An inappropriate framework could undermine the credibility of the financial statements and the audit opinion. So before an auditor is going to accept an engagement, they have to make sure that the company, the client, is operating under the correct framework, that they are applying the correct rules for the framework that would make sense for their business or for that government or whatever the case may be. So if they are not using the correct framework, if it's not acceptable, then the auditor most likely will not accept that engagement unless they're absolutely required to. I think there's a rule where if it's required by law that they do it, then they'll still do the engagement. But other than that, they will deny the engagement, or they should, if the incorrect framework is being applied. With that, again, that's one of the preconditions. Now let's go to the next question. All right, here we are at question 3. Before accepting an engagement, what must the auditor confirm about management's responsibilities? Okay, let's go through the options. A, that management has a system for reporting material weaknesses to the auditor. B, that management has acknowledged its responsibility for providing unrestricted access to records. C, that management is willing to allow the auditor to assist with preparing the financial statements. Or D, that management has signed the audit report in advance of fieldwork. Okay, so these, reading through those, you probably already have a general idea. One or two of them sound more likely than the other ones. If you need to, pause the video, think through this on your own, and when you're ready, come back. We'll look at the answer to learn about this precondition. All right, here we are. The answer is B, that management has acknowledged its responsibility for providing unrestricted access to records. Okay, so this is one part of the management responsibilities. Let's go ahead and talk about this precondition. One of the preconditions for an audit is that management must acknowledge its responsibilities, which include, and this isn't in any particular order, this was just so that I could kind of easily show you the different ones. 1, preparing financial statements in accordance with the applicable financial reporting framework. 2, designing, implementing, and maintaining effective internal controls over financial reporting. And 3, providing the auditor with unrestricted access to records, documents, and personnel necessary to obtain audit evidence. So again, these are management's responsibilities that they have to acknowledge that these are their responsibilities before the auditor is going to accept the engagement. This acknowledgement is critical because it establishes that the auditor will have the cooperation and resources needed to conduct the audit effectively and in compliance with professional standards. Without management's acknowledgement, the auditor may face significant scope limitations or barriers that could compromise the audit's quality and reliability. This acknowledgement is typically formalized in the engagement letter to ensure clarity and agreement. So they have to acknowledge their responsibilities beforehand, and then once it's a little bit more solidified, then they do the engagement letter. And we're going to talk about the engagement letter specifically in another one of the videos that I'm going to be doing in the next little while. But again, this is a precondition before you do the engagement letter, before you do all those other things. Management has to accept that these are their responsibilities, that they are in charge of the financial statements being prepared. They are in charge of designing, implementing, and maintaining internal controls. They are in charge of providing the auditor with whatever the auditor needs to be able to perform the audit. So those are management's responsibilities, and those have to be acknowledged, and the auditor has to know that management has acknowledged them for the auditor to accept the engagement. That was another precondition. Now let's go to the next question. All right, here we are at question 4. Which of the following must an auditor confirm regarding the scope of their responsibilities before accepting an audit engagement? Now, based off the previous question, you might have a little bit of an idea on this one. So let's read through the options, and when we've read through them, go ahead and pause the video, think through this, and when you're ready, come back. But again, let's read through the options. A, that no limitations will prevent the auditor from complying with professional standards. B, that the auditor will be permitted to consult with other auditors for advice. C, that the auditor will not need to perform substantive procedures during fieldwork. Or D, that the audit report will not include a modified opinion. And again, just saying it one more time, these are some of the early audit videos. We haven't talked about opinions or modified opinions. We haven't really talked about substantive procedures. So if you don't really know what that stuff is, that's okay. Again, we're going to talk about those eventually when we get to those in audit. But based off these options, again, pause the video, think through these, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is A, that no limitations will prevent the auditor from complying with professional standards. So that's one of the things that they have to know about the scope of their engagement. So this is one of the auditor's responsibilities. It's kind of linked to management responsibilities in the fact that, well, we're going to read the explanation. Let's read through it. A precondition for accepting an audit engagement is that the auditor must confirm there are no scope limitations that would prevent them from complying with professional standards. Scope limitations, such as management withholding information, restricting access to certain areas, or limiting interactions with key personnel, would significantly impair the auditor's ability to perform the engagement in accordance with auditing standards. If such limitations exist or are imposed, the auditor may need to decline the engagement or withdraw if already engaged. Ensuring there are no such limitations helps maintain the integrity and reliability of the audit process. And again, we're going to talk about scope limitations more in future videos, but again, if management is going to withhold information or they're going to make it difficult for the auditor, that's something that the auditor has to make sure is not the case. They have to make sure that that's not going to happen. That's one of the preconditions for the audit. And that also is kind of talked about in the engagement letter as well. But this is kind of like the preliminary stuff. They're kind of talking about all this before they even do the engagement letter when they're doing the preconditions. So kind of this whole video is the auditor responsibilities when you think of they need to know these preconditions and therefore they need to understand if they're met or not. Now, with that, that was another precondition. They can't have any scope limitations. Now let's go to the next question. All right, here we are at question 5, and this is a little bit longer of a question, so I'll finally kind of say this tip that I typically give to people. Make sure you always read the last part of the question first. It's not always going to give you exactly what you need, but very frequently, especially on test day, it is going to give you context for what you should be looking for. So again, you read the last part of the question first because you have no idea what you're going to be seeing on test day. So you read it to know kind of what you're dealing with in the question, then you read the rest of the question and you already know kind of what to start looking for. Of course, if it's a single sentence question or 1 or 2 sentences, then this doesn't apply as much. But if it's a bigger question, then you read the last part, read through the rest of it, and again, that will give you an idea of what you are needing to do. So whose responsibility is this? So based off this, imagine we were at test day, we read that last sentence, and immediately we start thinking about responsibility. Okay, responsibilities in audit, what does that mean? And then we start reading from the top, and then we'll have a better idea of what to do as we're reading through it. So let's read the rest of the question now. Before accepting an audit engagement, the auditor must evaluate whether preconditions for the audit are present. One responsibility involves acknowledging the design, implementation, and maintenance of internal controls over financial reporting. Whose responsibility is this? Now, we've gone over this in the video, so you should already probably know the answer. If you don't, pause the video, think through this, and when you're ready to come back, we'll look at the answer together and learn from that. All right, here we are. The answer is B, management's responsibility. Again, that one should have been pretty clear just based off of what we've gone over so far. As part of the preconditions for an audit, management is responsible for acknowledging its responsibilities, including the design, implementation, and maintenance of effective internal controls over financial reporting. The auditor is not in charge of the effective internal controls. Let's keep talking about it. This acknowledgement ensures the auditor will have a reliable basis for obtaining sufficient appropriate audit evidence. The auditor's role is to evaluate whether management has acknowledged these responsibilities and whether the procedures and whether the preconditions for the audit are met. The auditor does not take responsibility for designing or maintaining internal controls, but may assess their effectiveness during the audit. By clarifying this distinction, both parties understand their roles, reducing misunderstandings during the engagement. And again, a lot of this is kind of fleshed out a bit more when we start talking about the engagement letter and also the other videos that we're going to make in the next few days. So management is in charge of, again, implementing and being in charge of the internal controls, but auditors will probably audit those internal controls. So those are the two different things. But as a precondition, the auditors need to make sure that management understands that that's their responsibility. Now, with all that, we've gone over 5 questions to learn about the preconditions for accepting an audit. Now, before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You see 2 or 3 questions mentioning the preconditions for an audit, or you see 2 or 3 questions talking about the auditor's responsibility or management responsibility throughout the questions that you're studying. And that informs you what you need to know for test day. Again, you're not focusing as much. I mean, of course, you still need to know, but you're not focusing as much on the things that are kind of one-off questions. You want to focus on the things that you're seeing over and over again. And you, in your own words, summarize these pillar topics. And as you're doing this each day, you are building your own personal repository of the most important things you need to know for the exam in your own words. With all that, let's go look at the pillar topics for this video. All right, here we are at the pillar topics for the video. Let's just dive straight in. Preconditions for an audit. This is kind of a general overview, this pillar topic. Preconditions for an audit are the factors that must be evaluated before accepting or continuing an engagement. These include determining the acceptability of the financial reporting framework, confirming management's acknowledgement of its responsibilities, and ensuring there are no scope limitations. And all of that is the auditor's responsibility to do all of those things to make sure that the preconditions are met. Now let's talk about each of those preconditions separately. Evaluating the financial reporting framework. The auditor must confirm that the financial reporting framework to be applied is appropriate for the financial statement's purpose, such as GAAP or IFRS for general purpose statements. An acceptable framework provides a suitable basis for preparing and assessing the financial statements. Now let's talk about management's responsibilities. Management is responsible for preparing the financial statements, maintaining effective internal controls, and providing the auditor with unrestricted access to records and personnel. These responsibilities must be explicitly acknowledged as part of the preconditions for an audit. Management has to explicitly say, yes, we know these are our responsibilities. Now let's talk about the last precondition, absence of scope limitations. The auditor must ensure there are no scope limitations that would prevent them from obtaining sufficient appropriate audit evidence. Scope limitations could compromise compliance with professional standards and the ability to issue a reliable audit opinion. And we're going to, of course, learn more about a lot of these things, especially management responsibilities and scope limitations in future videos when we get there. But these are the basic preconditions that need to be met before an auditor should be willing to accept an engagement or continue an engagement. Now, with all that, we've gone over the pillar topics, and that is the end of this video. Before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. Again, it's 1 hour, it is free, and we will show you how to pass the CPA exams without wasting months or even years of your time. And after you watch that, you're going to want to learn more, So make sure you check out becoming a Superfast CPA Pro member, because remember, Pro members get access to a lot of great stuff. They get access to the Pro course, where we teach in depth exactly how you're supposed to be studying it every day. It's kind of like an expansion of the 1 hour webinar. And they get access to the full 10 question videos that I typically make for these MCQ walkthrough videos. Now remember, this video and the member video, they are both going to be 5 questions because this is kind of a small topic, but typically members get access to the full version where I usually go over 10 questions so they can get more practice and more understanding. So if you like this and you like our other products, make sure you check out becoming a Superfast CPA Pro member. Now, with all that, if you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.